Have you ever heard someone say, the purchase price of a house doesn't matter as much when you're buying with a mortgage? I know it sounds crazy, but today I'll explain why that's true using simple math and examples. So stick around because understanding this could change how you look at home buying. First, let's talk about the basics of a mortgage. When you buy a house with a mortgage, you're not paying the full price up front. Instead, you're spreading it out over 15, 20, or 30 years. This means your monthly payment is often more important than the total price you pay for the house. But here's the thing. Even if the purchase price goes up or down by a little, it might not change your monthly payment as much as you think. Why? Because of the way mortgages work. An increase or decrease of about $5,000 to $10,000 in the purchase price only changes your monthly payment by $25 to $50. This is why getting a seller credit to buy down your interest rate is more beneficial. This can lower your monthly payment by $100 to $200. For a 30-year mortgage, these savings add up significantly. So, focus on negotiating better terms rather than just a price reduction. Keep in mind, the bank will only lend you the appraised value of the home, not the purchase price, meaning the appraiser sets the value. Now let's talk about buying mortgage discount points. If you plan on staying in your home for a long time, buying mortgage discount points might be a way to save money. Paid for at closing, each mortgage points typically has a value equal to 1% of your mortgage. In exchange of these upfront payments, your lender reduces the interest rate on your mortgage. The exact reduction generally depends on the lender's terms and current market conditions, but it typically costs around 1% of the loan amount for each 0.25% reduction in interest rates. For example, let's say you're getting a $300,000 loan with a 30-year mortgage at 7% interest. Monthly P&I is $1,996. 1% of the loan amount lowers interest rate down to 6.75% with a cost of $3,000 points. Monthly P&I is down to now $1,946, so you're saving by $50 a month. Say you're getting seller credit for $6,000, and that's equivalent to 2% of the loan amount, reducing the interest rate by 0.5%. So the monthly P&I is $1,896. So you're saving about $100 a month. Now let's use another example to make this crystal clear. Say you're looking at two homes. One house costs $400,000 and the other one costs $420,000, which is $20,000 more. Now, you're putting in 20% down, so your loan amount will be $320,000 for house A and $336,000 for house B. And you get a 30-year fixed mortgage with a 6.8% interest rate. Let's calculate the monthly payments for both houses. Using a mortgage calculator, here's what we get. House A, the monthly payment on a $320,000 loan at 6.8% interest is about $2,086. House B is about $2,190. So, House B costs $20,000 more, but the monthly difference is only $104. That's it. Now, let's think about this. For an extra $104 per month, you might get a house with a bigger yard, a better location, a more modern kitchen. When you spread that $20,000 over 30 years, it doesn't feel like a huge difference. This is why people say the purchase price doesn't matter as much as the monthly payment. It's all about what fits your budget every month. But here's a twist. The interest rate affects your monthly payment way more than the purchase price. Let's look at house A again. At 6.8% interest, the payment is $2,086. If the interest rate were 5.8%, the payment would drop to $1,878, a savings of $208 per month. So even if you're debating between a $400,000 and a $420,000 house, the interest rate can make a bigger difference than the price itself. Here's the bottom line. Focus on the monthly payment, not just the purchase price. Small changes in the price don't affect your monthly budget as much as you think. And always keep an eye on the interest rate. It's the real game changer. When buying a house, think long term. Does monthly payment fit your lifestyle? Does the house meet your needs? If the answer is yes, a $20,000 difference won't matter much over 30 years. So the next time you're shopping for a home, don't stress too much about the purchase price. Instead, focus on the big picture, the monthly payment and the value you're getting. If you found this helpful, hit that like button, subscribe for more real estate tips, and drop your questions in the comments. I'd love to hear from you. Thanks for watching, and I'll see you in the next one.